My name is Joy Macknight. I'm transaction banking and technology editor at The Banker, and I'm here at EuroFinance in Copenhagen with Rajesh Mehta, who is regional head of Treasury and Trade Solutions EMEA for Citi. Rajesh, thank you so much for coming to and doing this video interview with us. What do you think are the main challenges in terms of the global economy for both corporates and financial institutions today?
Thanks. Thanks for that, Joy. Yeah, it's an interesting time. I think there are 4 or 5 factors driving the dialogue at this point. I think the first is obviously commodity prices. The second is around U.S. interest rates and when they'll rise. I think the third is the ongoing debate on the global economy, which parts of the world may be getting out of the economic slowdown, which not. China and how that's going to affect things. Those would be, I'd say, the major factors. There is a derivative factor of all that we've already started to see, and that is a slowdown in global trade flows. Global trade, in volume terms, value is obviously affected by oil and commodity prices, but in actual volume was down 1.5% in the first quarter, and another 0.5% in the second quarter. So that's something we're obviously watching closely.
You touched on it a little bit, but how is this impacting Treasury and Trade, and then how is Citi responding to it to help its clients overcome these challenges?
Sure. So I think the way it's going to be affecting Treasury and Trade is in a couple of ways. Clearly, oil and commodity prices and trade flows are the mainstay of the trade business, and I think that is the effects of that are being seen. You combine that with the fact that there's still a fair amount of liquidity sloshing around at the short end of the curve, and so trade is under challenge as a business in all the transaction banks I speak to, and I think that's going to be the condition for a while. I think it's a wait and see attitude on some of the macroeconomic factors I mentioned, and there will be places which will be affected more than others. In those, you're likely to see a tightening of liquidity, a widening of spreads, so that might help. And of course, the other factor is the slight wait and see mood in industry generally around U.S. interest rates. With September gone, there's some announcements yesterday pointing to possibly the rate rise happening sometime this year. Now, on that, a couple of effects of that on the Treasury and Trade Solutions businesses globally. One is, rising dollar interest rates are generally helpful for the cash management business. However, it's been 9 years since there was a rate hike in the dollars, and there are people in Treasury who've really never experienced a rate hike, both in industry and in some of the banks. So, what sort of behaviors that rate rise will generate remains to be seen. But I think it's all going to be around the availability of liquidity, and I think as dollar rates go up, I think the difference in rates between the emerging markets and the developed world will obviously tip a little bit in favor of some of the liquidity flowing back into the high-yielding dollar-based geographies. So lots of moving parts.
And what would you say, or what do you think will be the biggest market disruptors over the coming year?
So I think over the coming year, I think your big disruptors are going to continue to be regulation. I think in particular resolution planning, in particular the ring fencing and separation of consumer investment banks. You've seen some actions on that. I think there's going to be continued debate for some banks around headquarters and the effect of where your headquarters are on your profitability and the sort of regulatory environment. Um, so those are the more they're disruptors, but they're more continuation of pre-existing themes, as it were. I think the fintech space continues to be incredibly interesting. I think it's interesting, and when I speak to people at three levels, one way to view them is an incursion into the banking markets. The second way to view them is an opportunity to collaborate. But I think what we're seeing, which is actually very, very cheering, is I think the industry is looking at the sort of problems that fintech is seeking to solve and actually starting their own initiatives to address them. So a simple example of that would be something like Bitcoin. I think there's been a lot more discussion in the media about how it can, threaten existing banking models. But I think equally, we're starting to see a lot of industry initiatives with, industry bodies as well as the banks on how you can leverage technologies like blockchain to actually re-engineer the way banks operate and thereby convert what initially may have looked to some as a threat into an opportunity.